Hey guys, so welcome to another episode of this course, uh, how to read market 4 hours chart. In today's video, I'm going to be walking you down to, this is the part 2. If you haven't watched your part 1 of this video, I'm going to be leaving the link in the description below. You're going to need access to understanding what price does. Now in this case, we'll be using Euro odd to understand what the market is actually doing. Now Euro odd has been actually bullish. All this move here is actually a restriction move to the downside. So now I'm going to be walking you a little bit advanced kind of, but there are two things that I like to map out in the market trend. Now first of all is the swing highs and the swing lows. This is the swing high. Let me take this one out. This is the swing high, the all-time swing high, and this is swing low. Yeah, this is the all-time swing low. Now, well, first of all, we don't actually know where the market will actually retrace to, because if we are supposed to map out other blocks here in this zone, we'll map out some few areas. One, this is just two other block, one, and the second one I'll be looking at is this. Right, just get this one here. The second other block I'll be looking at is this. Now, why did I say this? This was the last order block. So the only significant order block that we have are this one. This has been respected already. So we have this and this as the most significant order block. Because why? This is the zone that price reacted to before moving up. So now if you're looking at what price does, it's simple. Now somebody may say this market is actually bearish, but it's not. I'll tell you why. Let's use our trend line to identify it. Like I said, until the market break above the initial high, which is a major swing point, we cannot say this market is bearish. Until price takes up this high, until price takes up this low here, we can say the market is bearish. But what did we see here? This whole move here was to come down to this other block before going up, because why? This all-time high has not shown also change of market structure, so we cannot say the market is actually bearish. We are actually what? Bullish. So some folks were selling here, and this was the last low. Market what? And started going up. What are they going to be doing? We don't know what they're going to be doing. They might likely come to this other block here, or come up here and take up the high. But what we're looking at is simple. It's to identify what price will do. Now, one of the things that I understand about trading is I try my possible best not to predict, because most of the times I allow the market do its will. Why? Because I understand that whenever the market does its thing and I'm able to follow suit, I become less stressful and my head is not actually aching me on thinking of what the market will do. Okay, that way you might get disappointed, and most of the time I discover when you predict the market and it fails, you'll be like, oh, market has failed, and you just pull out of the trade and just go out. And fortunately or unfortunately for you, the market might turn out and work out and just give you exactly what you predicted, but not in the way you thought about it. Because why? The market players actually knows how you think, so they are possibly going to be doing some things that are a little bit different from what you don't know. Okay, so they try to beat your imagination. So this is an order block here. Why is this an order block? This is the last candle that took price to the upside. Let us zoom closely. Okay, change this back. Okay, this is the last candle that took price to the upside. So this, why am I saying this? Price reacted to it, but I might be seeing this also because of what I'm seeing. I'm seeing a fair value gap here. Okay, let me get some tools. I'm seeing a fair value gap here. The price might react to it. Okay, let's say this and this. Okay, there's a gap in between here, so we're expecting the market to come to this gap here. So if the price fails to get to this order block, and if it breaks above it, it might come up and take up this high here of some folks that are selling from this zone. Some folks that are selling from this zone. So whenever the price takes this high, it will retrace back, and once it comes back, we are actually going to be looking for opportunities to go long. But in a case where price fails to take up the high, but rather comes and respect the zone here, you're going to be looking for opportunity to sell. Let's go to 1 hour. Okay, and confirm the fair value gap we saw. It might just happen. It might just happen. Now, why am I saying it might just happen? This is the zone here. Now, according to advanced concepts, we know that price creates static liquidity near POI. What do I mean by that? Whenever the market creates a double top like this, it means they're going to be coming back to this order block here before reversing back. So we're going to be turning bearish, or if price mitigates their position here and take up this high, we're going to be waiting for what retracement move to rise price to the upside. So we're expecting something like this. Sorry. Price getting here, and retracing back to the downside. If this be the case, then we might come back to this order block, react to it before dropping down. But if it doesn't happen that way, the price retrace here and just pull back a little bit and takes up this high, then we are going to be looking for opportunities to buy. But from what I'm seeing here, according to what I'm seeing here, I think we might be turning back to bearish. We might be coming back to the downside. So now, this is what folks do for trend line trading strategies, like beginner traders. Let's outline some stops here. So what can we see? Like we are told about the Mary formula, when price come here, we should be looking for opportunity to sell. Opportunity to sell, to sell, to sell. Okay, so let's go down to 1 hour. Okay, let's go to 15 minutes. Yeah, let's see what we have. You see that the candles are much on 15 minutes. Okay, what can we see here? It's kind of like, what would I call it now? It's a double top, right? If I'm not mistaken, it's a double top. First left here, break of structure, price pull back down up there and give us an entry here, and we kept going down. Let's see, now we started going down. Now another thing that I like to do is to know when to get out after entry. This another thing here. So if you want to be trading like the beginner traders, you can as well do so. Okay, So if you're involved in this trade, you can just exit once you see the market about to reverse. So you can see that when we entered here, price came back to this other block here. Now if I'm to be here, what I would do is I will actually break even, take partials before the breakout happened. Okay. So if you are a trade trader, you can actually trade that. What we did was simple. We go to the 4 hours and we have lined areas where the market touched the trend lines, and whenever it touches the trend line, we go down to the lower time frame. But while doing this, you need to have a picture of what the market is doing. Like we said, we might turn bullish or we might turn bearish, or in between. Okay, so while you're selling, you want to make sure that you have a big picture of what the market is doing. So it's a big picture that enables you to know what to do in the lower time frame while you are trading to stay profitable. And if you get any value from this video, don't forget to subscribe, like, leave a comment in the section below. Okay, and let's know what you think. Thank you.